Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the forex synthetic market. In today's video, we shall discuss M1 EMA loop trend change sensitivity in forex synthetic market. Okay, if this is your first time of visiting this channel, try your best to subscribe and turn on the bell notification so you get notified each time I upload a new content, and try to refer your network to this channel so that YouTube push us to a high level of audience. Okay, right now this topic is something that's gonna change your trading life, and you notice you have been losing a lot of money trading simply because of ignorance of what this video is going to show you. So you have to watch this video to the end for you to gain value. Okay, and if you're type that have been losing a lot of money trading, to the extent that you try to trade on your own, you lose money, try to trade on your own, you lose money. What you need is a VIP signal, and that is our work. Our VIP signals are the best. We have 4 categories. Make sure you actually subscribe to our VIP, and currently we are running 50% discounts on boom and crash market, and you have to join us to trade boom and crash signals, both spike and default directions. Signals are being sent. Okay, so this question here, we have when at least 2 exponential moving averages cross each other, it signals changing trend, especially when the crossing happen after a smooth trend. So all these things I need to teach practically as I go to the MT5 chart so that it will be more understandable. Okay, right here we have a volatility 75 index in 1 minute time frame. So you really need to know how to set up these moving averages. So we have a moving average 50. These are the parameters. So I have moving average 200. These are the parameters, and we have moving average 100. These are the parameters. Okay, the numbers are the period, as I have mentioned. Now our concern is the crossing of the 3 moving averages. So whenever the moving average have completed its course, make sure you mark the starting point of the course to the ending. Like the first course, you connect it to the last course. You have to do this. Okay, it's very necessary. That mark that there is a crossing, and that have created sensitivities in the market. Okay, what is sensitivity? Let's go back to the document. M1 EMA loop trend change sensitivity. So the sensitivity of trend is a kind of a factor by which a forward trend tend to change to a reverse trend. Okay, this topic is going to be a high-level mathematical topic that will come with a lot of physics and mathematical applications, which I cannot go deep to bring into this content because this is a preamble. But I'm going to touch some of the few mathematical and physical concepts that will help you in this sensitivity analysis. Okay, take for instance, we have a forward signal of this magnitude. When I say a magnitude, I mean the length, the quantity of pip the signal generates. Okay, so this is a forward signal of this length, and suddenly we started seeing loss of energy and momentum, and price bend like this. Okay, price bend like this. So if you want to study the sensitivity of the EMA loop, like the sensitivity of trend change, now you have to consider what really happened here. Something must happen, like before market started deforming or changing direction. Something must happen. So you have to measure the height of the range that occur. That is arbitrary range that will happen here. You measure the height of that range. Take for instance, if the height of that range is 164 pips, you quickly measure the length of the forward signal in pips from where it started to where it ended, and this is over 1,431. Now if you divide this result by the height of the range, if it is greater than 1, it shows that there is high sensitivity for the trend to change, but this is not a guarantee. So, but it's an indicator that the trend might change. But that's what we mean by sensitivity. Sensitivity is the length of forward signal over length of range signal. That is sensitive, but I'm not going to go into a lot of writing or describing this on a notepad or all of that. I just say it, but in advanced course where I will continue this topic to higher level, I will be actually detailing all the mathematical and physical concepts involved in sensitivity of trend change. Okay, so the next thing is crossing. Okay, so crossing is a physical tool. Like crossing is an indicator. The crossing event is a physical method of analyzing the sensitivity in trend change. So if a forward signal, like the forward signal, a forward signal is the signal from the left before the trend change. If the forward signal, like if the forward signal has high sensitivity, like if the sensitivity of forward signal is greater than 1, okay, take for instance here, the because when you are measuring a forward signal, you have to start where the moving average cross in 1 minute time frame, because it have to be in the 1 minute time frame that will show the strength of the signal. Okay, so it is in 1 minute time frame you will see the maximum energy in the signal. Okay, so right here you see we have over 2,500 pips, and then it's still counting because it haven't crossed. So you can start where you ended and you measure again, and or you can step off to 5 minutes time frame and keep measuring. So we can have up to 5,000 pips as our signal length. Okay, uh, now the range length is when market reaches certain level, certain position, it stop breaking level. So it stop breaking level at this point, and then it drop to this level and change. So this is the range, and then the height of this range is 1,000. So if we divide 5,000 by 1,000, we have a sensitivity of 5. So sensitivity of 5 is greater than 1, and so it has a likelihood to change, but this is not sufficient and necessary condition. This is part of the conditions. So the next thing we'll be looking at for is the crossing of the moving average low. Once the moving average have crossed, the sensitivity have increased. The higher the sensitivity in the probabilistic scale of 90 to 100%, the greater the possibility of that market to change direction. So probabilistically, we are now going from sensitivity to probability analysis. Probabilistically, once the moving average happen, and once the moving average crosses and the sensitivity is greater than 1, we are having 90 to 100% probability for trend to change. And so what happens? You see the market changes trend automatically. Okay, so whenever you are trying to make a trading decision, always check the configuration of the price movement against the moving average loops. If it crosses below and you wanted to buy, don't buy. Stay away, don't buy. What the market will do is that it will respect that course, because that crossing actually is a range uh state. Like the crossing is a range event. For crossing to happen, the market is ranging within those zones. So a range can be regarded as a kind of equilibrium state in the market, or a kind of decision mode. Okay, so decision mode will process the behavior of traders and output a signal. So this range, this crossing region or the range region or decision mode is a kind of processor that outputs a signal. So the output is the forward signal. Okay, so once the moving average loop crosses, they are going to output a forward signal. So that forward signal will go against you if you didn't actually run this analysis. Because maybe in the higher time frame it's telling you to buy. Yes, it's telling you to buy, but definitely this output signal, this sell signal that was created and output by the crossing region to around the crossing region or the decision mode, the equilibrium state in the market, is going to wipe your stop, is going to hit your stop loss and then go up. It will buy once your decision was correct, but because you failed to consider this is going to deal with you for many years. Okay, so you see, a trader that sold after the crossing just enter at certain resistances like here, or enter here, you should have cash, you should have got some pips, and that's crazy about this market. Okay, now let's check more about this stuff. Let's consider volatility 51s. Let's consider volatility 51s, and so let's see the possibility of getting a cross event. You see, I was talking about smooth. Let's go back to the document. Okay, you say especially when the crossing happened after a smooth trend. What is a smooth trend? So that's the question. So this sensitivity measurement by moving average crossing is going to make sense if we have a smooth forward signal. It's going to make sense if we have a smooth forward signal. A smooth forward signal is a signal created in such a way that the moving average loop do not cross. Like after the first cross, the moving average do not cross again and remain parallel infinitely. Like they become approximately parallel to the infinity. The only crossing we see is the first crossing, and then the moving average loop will remain infinitely parallel. When that thing happens, it actually means that the EMA loop is smooth. So when it's smooth, the next thing you have to mark the crossing. Once you know it's smooth, when you mark the crossing, what you are waiting for is you need to measure the length of the output signal. Okay, and then you see we have close to 4,000 pips of, okay, let's call it 5,000 because you have to stretch it down here. And then here we have the final point, and then the market reaches this high and start changing direction. And so this is a range of 1,000. So the sensitivity is more than 1. Now the next thing, we have a crossing that happened. So the market just crossed here. So when the market cross, it cross because indicator used to lag. So when it cross, you might have cut the price action somewhere here. So if you enter here, you should have cut this movement and then take your profit before it start coming back. Okay, so you can see that when the crossing actually happened because the market want to change direction. Okay, so and you see what's happened from here to here, that there is no smoothness in the crossing. Like we have a crossing here, there's no smoothness in this movement. We have a crossing here, and suddenly we have some crosses here, so it's not smooth. And then we now have we have another cross here. So you see that this crossing that happened like this, like it happened during a downtrend. Now because it happened during a downtrend, you cannot make decision within this length because of this type of crossing. So where you can make decision is, okay, you can make decision if the indicator, like the moving average, become parallel, like if they are no longer crossing each other, like you should have maybe cut this move. This is around one, just this is for scalping. You'd have cut this move. This is around 1,000 pips. Imagine taking one lot size that is over $1,000. Okay, so with this method of trading, you can actually make some good decision. So if you are attempting to sell in this market, you cannot do that because the price actions are above the loop. Okay, so you stay away. You have to know the relationship between the price and moving average loop before making trading decisions. Let's go to forex market. Okay, I have gold here. Gold is a forex asset. So this is Saturday. Gold have closed. There's no trading here, but we can use a previous chart to analyze gold. Okay, you can see I placed some buys on gold. And someone will ask why we're already in deep profit. Why did I place the buy? It's simply the 1 minute time frame. The 1 minute time frame, okay? You see that where do we have that cousin? So we have a cousin here. We have a cousin that started from here and reached here. Okay. Then we are waiting for the price to remain parallel. Like to remain parallel. I'm sorry, we are waiting for the EMA loop to remain parallel. So it absolutely remain parallel somewhere here, somewhere here. So because we see this parallelism, we can just use it as a solid signal. So you just look for good prices, and if you are buying at a support. So you locate a support. This you see that price came here and go up, came again and go up. So you can enter, you can buy gold here. You see uh where we bought at even higher price, so we can buy gold here. Put your stop loss behind, like about the crossing. So the crossing happened here, so you have to study the price action where that crossing happened. So it happened here. So you discover that price fell to break this level, so you can put your stop loss below here. And definitely you are actually entering this market when there is parallelism existing in the EMA loop. So you will not be able to meet this signal because the EMA loop have filtered those signal out, and so it's not telling you you should enter here. It's just telling you. So when you enter here, the market will oscillate, will do some sort of things, but it will not hit your stop loss. And then what's happened? It keep pushing higher. It keep pushing higher. Are you getting it? One peep move, like 1 point move in gold with one lot size, is already paying you. If you check it, is already paying you $100 profit. So gold is a very powerful asset. Okay, because if gold move by 1 point, the peep is 10 pips, and now 1 pip is $10. So if you bought one lot size, if you traded one lot size, you're making over $100. You are making $100 profit. So that is the power of gold. So don't belittle any movement in price. What you need to study is the p value of that asset. Once the p value is profitable, then you can actually scale up with small change in price just by using big lot size. Okay, so this is for scalping. This idea is for scalping, and is for also long term. If you have understood the market from higher time frame, if you have the higher time frame view of the market, you can basically use this for long-term trading. Okay, my final uh word of advice here, like my final financial advice is, before you enter a buy, meditate first. And what are you meditating? Just write it in a wall. Write it in a wall, write it in a book, or write it wherever you can be seeing it all the time. In your trading office, make sure you write it. And what is that is, have I shake the relationship between the EMA loops and the price action. If it is below, then if the price action is below the loop, if the loop have crossed and the price action is below the loop, and you want to buy, you will not buy. You have to stop that buy and wait for the loops, for the price to be above the loop, and for parallelism to exist inside the loop, then you buy. Okay, so if you want to sell when the price is below, when the market have crossed below, sorry, when the moving average loop have crossed below and price is below it. And then if you are trying to buy, wait for the moving average loop to cross up and price is above it, and then you buy. If you don't know this simple statement I'm making, you will lose money trading both synthetic and forex markets forever. No matter how your top-down analysis is, you keep losing money. But the truth is, where we come into this game is in the top-down analysis. We have a lot of traders in our VIP channels, and they're making steady profit. Some make 10 times, some make 100 times, some make 1,000 times, some make 10,000 sometimes of their initial equity. What you need to do, we have 4 categories. All you need to do is to actually DM me on Telegram. You see the Telegram channel link in the description of the video, and then tell me that you really want to, take your trading to a higher level, and we will change your life automatically. Okay, so thank you and bye for now.